What is up, guys, and welcome to another edition of Market Marauders, beating the market one trade at a time. If you're new to Market Marauders, investment channel, helps you follow the best deals in the market. All right, so let's jump into it. So this week is earnings season. Earnings season is back up on us yet again. So this is going to be my Webull option picks for the week. So this is my watch list. I give it out every week for free. It is free 99. So you all can go check it out. I try to post in my community tab as well, so that everybody can check it out. But these are essentially the stocks that I watch for options trading, and it's going to be a quite lengthy list since there are so many earnings this week. All right, so let's jump into it. The first one we have is Netflix, ticker sign NFLX. Moving average 50 is $544. Moving average and 50 cents. Moving average 100 is $540.69. Moving average 10 is $539.68. They ended the week at $530.79. Then after hours went up $2.69 to be at $533.48. So we can see that they are on a bearish downtrend denoted by this moving average 10 line crossing this moving average 50, which is the purple, and actually crossing this moving average 100 line. So a little bit of a bearish downtrend to end the week, but that doesn't mean that they're going to be bearish for the whole next week. That just means that they ended this week bearish, but hope that this movement helped them to continue to grow towards the end of the week, this plus $2.69 mover. So on the channel, I like to give some background information on what's going on with the company. So hopefully it can help you out. So let us do that now. So going into some background information on them, we can see that Netflix has a couple press releases coming out. Ludacris, the rapper, is going to be releasing, looks like an animated musical series. It also says Netflix is announcing documentary that's coming out, and then some other stuff about after life of the party for Netflix. Just a lot of different updates going on for the company as a whole. Just basically shows that they have a lot of things that they're doing, trying to expand their streaming service. The big main catalyst that is going to be next week is going to be their earnings. So their earnings is going to be next week on the 20th. If you haven't gone to their earnings, you haven't listened to them before, they're actually free. You can go listen to them. Go to Netflix Investor, and then you can add it to your calendar. You can listen to it. It's free for everybody who's an investor, or even if you don't even have shares of the company, you can go onto the stock website and actually listen to the information itself. So that all you have to do in order to do that is smash that thumbs up button. No, I'm just joking. All you do is just click on this link right here, and then you go, take you to a portal, and then they'll ask you a couple of questions, and then there you go. Try to go on during the time that the video or the earnings actually start, so you're not in some like weird lobby with terrible elevator music. But yeah, you can go listen to it yourself, and that's going to be the trend with all of these stocks. All these stocks have earnings coming up, so that's why they're on my list. But we're also going to talk about some of the things the companies are doing, just not earnings itself being the main catalyst. So with that being said, we're going to go to the options side of Webull. If you'd like to sign up for Webull, get 2 free stocks when you sign up and deposit $100 or more. I have a link down below where you can sign up for Webull, so check that out. This is going to be from the perspective of Webull, so just bear that in mind. You can use Webull even though you don't have an account with them. They have really good charts, so you can just type in Webull.com and press the trade button, and then it'll pull up the charts that I'm using, so that's very helpful. Also, they have screeners as well that you can use, so very helpful tool overall, and a very good tool that I would say to start using, especially considering all the crazy stuff that's going on with Robinhood and their customer service. So that's not a diss to Robinhood. That's just saying, I see a lot of people switching over to Webull and the platform itself growing. So I think giving videos from the perspective of Webull is going to be a lot more helpful to the majority of people than from Robinhood. So with that being said, I think a call is the best option. January 15th, 2021 is probably going to be my expiration for all of these. So just keep that date in mind. Since their 52-week high is $575.37, I don't believe that it'll get past that value, especially considering it going down. But I do know that there are potentially a couple of upgrades coming up for this company, considering Disney trying to compete with them for their streaming platform or streaming service wars, basically. But I think Netflix is basically the number one contender in my opinion. You also have Apple, who's competing for the streaming audience as well. So those are the big three: Apple, Netflix, and Disney. But Netflix's budget is just like ridiculously large, and all they do is streaming. So I think with that being said, they have more resources and more capital to continue to grow their product line, which are shows and movies. So I think that'll be more beneficial for them in the future. So that's why I have them on my list. I think a call is the best option. So if you're not familiar with options, a call means you believe that the stock's going to go up. A put is where you believe the stock's going to go down. For the sake of this video, I'm only going to be talking about buying, which is the bid section, calls, and buying puts, which is the bid section of this chart right here. So I think buying a call between $560 strike price, which is this middle price right here, to about the 580 strike price, I think is a pretty good area to look at. So you'll be paying between $5,10 to $4,080 per contract. Now they are a little pricey, especially considering how much these are, but I can't say whether one's cheaper or one's more expensive because risk management is basically dependent on everybody in their own financial situation. So the goal of this video is just to point you in the direction and tell you what I'm looking at. So watch list doesn't mean hey, I'm going to be buying all of these. Watch list to me is just I'm keeping my eyes out on this, and if a deal comes about, then I may execute that deal on my own. So just bear in mind it's not financial information. It should offer educational purposes, so just bear that in mind as well. Going to my next one, we got ticker sign SNAP, and that's for Snap Incorporated. So the company that makes Snapchat, if you're familiar with Snapchat. Snapchat has basically had competition as time has gone on with the growth of TikTok. I know Snapchat was kind of struggling there for a while after their IPO, kind of been in the 20s range. But I think, with the competition of TikTok coming out, I do definitely see a lot of new, fresh blood and fresh ideas coming to Snapchat. Whether they're going to copy some things from TikTok or not, I'm not sure. But I do know that since there's competition out there, it's kind of driving them to make better features for their apps in a faster pace. So if we look on here, we see they are bullish, denoted by this moving average 10 line being above the moving average 50 and moving average 100. Moving average 10 on them is 27.84. Moving average 50 is 27.44, and moving average 100 is 27.23. So it looks like they ended the week at 28.16 because they went up 33 cents after hours. So definitely bullish, denoted by this line right here being above both of those other metrics. So interested to see how that opens on Monday, especially considering that their earnings will be on Tuesday. So on here, basically just announcing that their earnings, third quarter 2020 results will be on a conference call. You do the same thing with the other one. You just click on that link and then, take you to a portal. And then from that portal, you can go and listen to that information. So going into some of the top parts, Snap Pictures original shows and new fonts debut. Bloomberg says Snap 170 million use in augmented reality. The New York Times, Snapchat expands its deal with NFL and Disney. Snap can now create dynamic ads automatically. Secrets to Snap's recent success. And then Snap is the world's most innovative company. So a lot of good, press coming from, high up investors. Bloomberg, and also talking about deals with NFL and Disney. So major companies do support Snapchat. So it's not anything to be looked over. And I know me personally, I've made a couple of geo filters on my own just to promote the channel. So it's easy to use software, and it's pretty cool. And since a lot of people use it, I think it'll continue to grow as time goes on. So this is where you'll click on. Once you click on that link, then you'll go right here. It tells you it's Tuesday, October 20th. At 2 p.m. Pacific time or 5 p.m. Eastern time. So it's going to be after the market closes. And then you can go and listen to that. Just click on this investorsnap.com around the time when this is going to be on here. Then you can get all the good information from that. These are good to listen to because it tells you the company's strategic position to move forward and where they plan on taking the company, as well as financial information. One of the things we'll be looking for, a huge catalyst, is going to be number of users. I wonder if the number of users went down since the birth of TikTok, or if their amount of users went up. So I wonder if more people, got on Snap, considering the TikTok boom, or if more people just switched from Snapchat to TikTok. So interested to see, their growth of numbers as they have, a direct competitor, which is TikTok. So with that being said, going into the option side, we're going to type in ticker sign SNAP for Snap. We're going to go with the same time frame, which is going to be January 15, 2021. Their moving average 50 is 28.56. So, they're at, a pretty high value already. But I do think they will have a good valuation. I think their number of users has continued to grow, especially with their major deals with other companies. I think, that's a good catalyst for them to continue to grow. So I think a call between $28 to $29 is a good variable. You're looking to pay between $315 per contract to $271 per contract. So just bear in mind that their earnings is on Tuesday, so volatility on that will be highest around Monday. So, a lot of companies or a lot of options that I've traded, they'll start to go up before earnings, and then after earnings, they'll immediately sell off quite a bit, even if their earnings is good. So just bear that in mind. That's one catalyst to look for when trading options. Volatility is always good because it helps you to execute your option, but also bear in mind, volatility can also hurt the same way. So if stock moves down fast and you have a call, then that's going to hurt your call. But if the stock moves up and starts to rally, then that's going to help your call. So I can't tell you where and when to exit or enter a trade, but I'm just saying to keep that in mind when looking at the stock on your watch list. So going to the next one, we got ticker sign VZ, and that is for Verizon. Their moving average 10 is $58.19. Moving average 50 is $58.48. Moving average 100 is $58.92. So if we look on here, they are bearish, denoted by this moving average 10 line being below the moving average 50 and the moving average 100 line. So yeah, bearish as far as Monday is concerned. They ended the week at 58.01. So let's go into some information from them. So this is just some of the press releases. Business host Women's in Tech Mentorship event October 23rd. Blue Jeans by Verizon named the Visionary and Gather Magic Quadrant for Meeting Solutions. Verizon to offer Motorola One 5G UW with 5G ultra wideband and 5G nationwide capability. Verizon 5G wideband services available in more cities. A new era of iPhone with 5G. Verizon offer iPhone 12 lineup with orders starting on the 16th. Fastest 5G network in the world, just got bigger and better. So those are some of the articles that are on their press releases. So with that being said, especially with the earnings coming up next week, let's jump into the options side for this company as well. Their ticker sign is VZ. So for Verizon, We're going to go to that date of January 15th. And their moving average their 52-week high is $62.22. So they're pretty close to their 52-week high, but I think they will surpass it. My synopsis for that is that there are going to be a huge number of sales from their iPhone 12 partnership. So I think with them having the largest 5G network, on top of the fact that Apple has already released their 5G capabilities, I think that this earnings is going to be pretty good. As the other earnings that's coming up after that will probably be good as well. So I think it's probably going to be a record number of sales for the next earnings coming up. But I think we can see some of that beginning with this earnings, and their projected range for how they're expanding their 5G. I think it was a pretty good plan that they had, and a pretty good plan for implementing the sales of these new iPhone products. So I think since 62 is their high, I think between 60 to 65 is a pretty good option, in my personal opinion. I think with this expiration of January 15, 2021, stay in line with that. So I think a call, in my opinion, between $60 to $65 is a good option. You're looking to pay between $127 and $31 per contract. So not as expensive as the other ones, but I do believe that Verizon definitely has the momentum to continue to move. Also bear in mind their earnings is Wednesday, so most likely the majority of the volatility is going to come on Tuesday from this stock. So also bear that in mind. Moving on to the next one, we got ticker sign ABT for Abbott Laboratories. Their moving average 10 is $109.82. Moving average 50 is $108.64. And the moving average 100 is $108.99. So they ended the week at $109.58, going down 9 cents after hours. But if we look at the chart, we can see that they are still bullish. So they had a pretty significant bullish uptrend starting on around the 15th, continuing through the 16th. So we see on here their moving average 50 line, moving average 10 line went above the 50 and the 100, which are both of these purple and yellow lines, to be bullish. So with that being said, I think that they have a pretty good future ahead of them. I don't have any articles from them, but I do believe that the company will continue to grow. I think, they were definitely able to take advantage of the pandemic. I know when the pandemic first started, they were in the news quite a bit for creating testing. So they were one of the first companies to begin, with the whole testing process and using their laboratories to help with that. So they have a lot of data on that, which I think will yield beneficial for the company in the long term. So with that being said, I think a call for Abbott Laboratories is probably the best option. Now, their 52-week high is $114.20. So I think if you go and stick between this $110 to $115 strike price range, should be a very safe metric for it to actually reach. So you're looking to pay between $555 per option to $410 per option, given the same expiration date with these two strike prices. So going to the next one, we have Tesla, most volatile stock of all. So Tesla has kind of been up quite a while, as the weeks have gone on, kind of been on a little bullish run, but towards the end of the week, they kind of sold off a little bit. So kind of stalled out towards the end of the week to go bearish, even though they were on a pretty nice bullish run towards majority of the week. So their moving average 10 is $446.90. Moving average 50 is $450.70. And the moving average 100 is $442.45. So if we look on here at Tesla, they went down 97 cents to end at $438.70. And we're going to go to some background information on them. They do have an earnings coming up. Their earnings is going to be on next Wednesday. So the same as Verizon and Abbott. So what to expect from the earnings? Given some more delivery numbers, profitability numbers, things of that nature. I don't think it's going to be anything drastic, but since the stock is so volatile itself, they've already given the production numbers, vehicle production deliveries, which is just over 145,000 vehicles delivered. Um, you know that article, and then they had Battery Day, which was pretty interesting. Even though the projection was kind of way out in the future, more time than investors, like myself, thought it was. I thought it was a lot sooner, but from all the developments as a long-term vision, it's a pretty good move for the company. But for a short-term, changing the company, I don't think that's going to be something investors were looking for. So with these third quarter financial results, I think the company is going to put themselves in a pretty good position, especially considering all the bad things that have been going on with Nikola. Now, Tesla's not the only SPAC out there. I mean, not the only EV out there. You got SPAC, you got, Helion, you got Nikola Motors, which is still a company, and then you got NIO, which is the Chinese company. So, there's still other companies out there in the EV space. So don't think that, Tesla will have majority of market share forever. Other companies are still, being developed. But as the time being, I'd say Tesla is like the Apple of the EV world. So they kind of set the industry standard, and more people prefer to buy them, even though there are other options out there. So with that being said, let's go to the January 15th date. And I think when these numbers come out, I think the stock will go up quite significantly, or at least back to the levels that it was at before. So this is the current strike price that it's at now. Ended at 439.67 is what it has on here. But I do think that the company will go up after this quarter earnings comes out. So I think a strike price between 440 to 460 would be a pretty good place. Now these are going to be pretty pricey, especially considering how much volatility this company has. So this is the one that I think can drastically move the fastest, but I think personally you may pay the most for these. Now it's going to be $5,900 per contract to $47.60, which is $4,760 per contract. Now I do think these are realistic values, especially considering a call, but bear in mind Tesla is very volatile, so it can go up that fast in one day, or it can go down even further in one day. So just put it on your watch list to look at, especially as earnings are coming up. So next we have ticker sign CMG, and this is for Chipotle. Their moving average 10 is $1,344.81. Moving average 50 is $1,332.94, and the moving average 100 is $130. Well, $1,307.83. So they ended the week at $1,339.67. But they are bullish, denoted by this moving average 10 line being above the moving average 50 and the moving average 100. So they've had a pretty substantial bullish run starting around the 13th. They shot up and continued to go up, but also their moving average 50 line started to go up as well. So I'll be interested to see how that plays out as the market opens. But going into some background information on Chipotle. It says Chipotle Burrito goes digital for its 20th anniversary. Starting October 29th, fans will be able to virtually trick or treat with 500,000 buy one, get one entree codes via text. Chipotle expands debt-free degrees to include HBCUs, which, if you don't know what that is, historically black colleges and universities. Chipotle carne asada is back on the menu. Chipotle launches in-app group ordering and offers family sponsorship on TikTok. So I think it's a competition that they had in September where it was hashtag Chipotle sponsor us, and then you could get sponsored by Chipotle. So a lot of things going on with the company, a lot of things cater towards a younger demographic that I'm seeing on here. But that's the people who majority buy their products. So their earnings will be on Wednesday as well. I think Chipotle as a company has done fantastic. But one metric that I am interested to see more than any other metric for the company is their online sales numbers. So their online orders numbers, meaning how many people have pre-ordered to come and walk in and pick up or delivery. That to me is a very important metric. Because I think if that number is increasing as time goes on, it shows that more customers are starting to buy food from them. But it also means that more, people are moving towards the online food ordering service. So I'm interested to see how that's performing for the company and what it could mean for other fast food companies, as we still combat this pandemic. So, with that being said, I think a call is the best option. I think Chipotle has had a pretty big run, pretty good run. Their 52-week high is 1348.88. I think if we look here, using the January 15th expiration date, with the strike price between 1340 all the way down to 1400, I think is a pretty good price. So if you look on here, you're going to be looking to pay between $9,410 to $7,130. So these are very pricey, for Chipotle. But keep them on your radar because you may be able to get a deal on this at some point in time. Now, deals do happen in options. Some people may sell it just to get rid of it, or some people may just not even know what they're doing and just put in random numbers. So deals can be made with options. So it's always good to just keep things on your watch list and just check on them from every now and then because it may be where a lot of people in the market sell off, even in anticipation on something bad happening, and then it doesn't happen, and then people buy back more shares. So all those things, volatility wise, do help the stock price and do help options. So volatility is key when looking at options. So just bear that in mind. So going to the next one, we got ticker sign DFS, and this is for Discover Financial. They do have earnings as well. It's going to be on Wednesday. Their moving average 10 is $65.95. Moving average 50 is $64.74. And moving average 100 is $64.71. So they are bullish, denoted by this moving average 10 line being above the moving average 50 and the moving average 100. After hours, they went down 34 cents to end at 64.14, but overall still bullish. According to some background on Discover, we can see that they're going to be announcing their earnings release on October 21st and conference call on October 22nd. Discover makes it easy for employees to vote. Discover awards $25,000 to innovative fintech startup at Chicago University or University of Chicago. Nearly 40,000 parents didn't plan to apply for federal aid. Now say they will result of the pandemic. Discover Financial Services to present at Barclays Global Financial Service Conference. A lot of things going on. One also important metric, Discover's financial service reports a second quarter net loss of $368 million. So that was a pretty big loss for the company. Definitely something that affected the stock. So let's go into some options and let's see how much these options are going to be. So let's type in DFS for Discover Financial. We're going to be looking at the exact same date, which is going to be January 15th, and also considering $87.43 is their 52-week high. I think a good price or a barrier for entry for you to get in at is going to be between $70 to $80 for a call. So why do you think? Why would you say? You're saying, why are you saying call? I think a call is the best option since their last earnings was so bad. Any positive news, about the company making more money, I think will definitely boost this company's price. So you looking to pay between $410 to $145 per option. Now, that $368 million net loss, that is a very big number. So, the street or, everyone in the financial market is basically going to be looking to say, okay, were they able to lower that number? And if they are, then the sky's the limit basically for Discover. So, volatility is key. So just bear in mind with Wednesday being their earnings, Tuesday is going to be the most volatile day. So just, plan accordingly for that. But I do definitely think that they're going to be able to lower that number for the amount of money that they lost prior. So I don't think that number is going to continue to grow. I think that number is going to have stopped and that they would have reversed it to have lost less money this quarter. So going to the next one, we got ticker sign TMO for Thermo Fisher. You may have heard of them in the news. They definitely were a big player making ventilators when the whole pandemic started. So around March, April, May timeline, I think the CEO actually went to the White House one of those days and presented to talk about the products and stuff that they were making. But, a big player as far as the pandemic is concerned. If we see on here that they are bullish, they ended the week bullish. Their moving average 10 is $470.22. Moving average 50 is $467.50. And moving average 100 is $463.71. They ended the week at $468.58. So still on a bullish uptrend, but looking to have turned sideways as time has gone on. So going into some background information on them, just going to read some of the highlights of these press releases. Thermo Fisher Scientific launches molecular closed cell processing system for cell therapy manufacturing. Thermo Fisher Scientific announces plan to expand sterile filing capacity for therapeutics and vaccines with a new facility in Singapore. So Thermo Fisher Scientific further expands its test portfolio to 2 new antibody tests. They also are going to hold a conference on Wednesday 21st. So there's a lot of things that they are doing as a company to put themselves in a pretty good place. As you know, there's still a race to find a vaccine. So I think Thermo Fisher is definitely going to be a name that continues to come up. Even if they're not the ones to directly find a vaccine, to help distribute it, I think they're gonna, benefit from that, especially, being backed by the president or this current president, and potentially, the next president, whomever it may be elected. I know that vaccines is definitely on the forefront of everybody's mind on both campaign sides. So with that being said, let's type in TMO. Let's go to the 15th, and we're going to look at their 52-week high is $470.84, and they're very close to that. So, they will have to test that, as their earnings begins to come up. But I do believe that they could potentially break that, especially considering they went all the way up to 470.22. They're not that far away. So I think strike price between 470 and 490 is a pretty good strike price range. So you're looking to pay between 2,500 to 1,760 for each call on Thermo Fisher. So definitely keep your eyes out on them. If not for options, just for a company in general that is in the whole pharmaceutical niche, especially surrounding the pandemic. So next we got ticker sign LUV, and that is for Southwest. They're on a bullish uptrend, which started on the 15th, continued on through Friday. So Their moving average 10 is $39.66. Moving average 50 is $39.21. The moving average 100 is $39.14. They ended the week at $39.65, so not too bad of a metric, but seem to be going sideways after this bullish run-up. So their earnings is going to be on Thursday. Going into some background information on them, just going to read some of this stuff. This basically says that when their earnings is going to be, it says 12:30 Eastern time is when the earnings is going to be. Says Southwest Airlines to add service at Chicago O'Hare International and Houston George Bush Intercontinental Airport. Southwest Airlines collaborating with Stanford University School of Medicine for guidance regarding the Southwest Promise. So yeah, a lot of things going on with the company, and a lot of things for the whole airline industry in general. So airline industry and the travel industry in general was hit the hardest because of the pandemic. So without this new stimulus being approved, it's kind of on pins and needles for the whole airline industry. So hopefully that'll get passed pretty soon. But I do know that they are struggling as a whole. With that being said, as a company, especially considering that there is no stimulus being passed anytime soon, I think a put is the best option for Southwest. Now, if we look at their 52-week high, is actually at $58.83. So with that being said, I think them going down as low as around $35, in my opinion, is a realistic value for the company. So we're going to go to the January 15th date, and we're going to go down to, let's say, between 35 to 25. So let's use that metric. So between 25 to 35 for a put. Now, bear in mind this right-hand side is put, and this right-hand side is to buy puts. So you're looking to pay between $32 per contract to $195 per contract. Now, that can all change once the stimulus is passed, but without a stimulus being passed, I don't think the earnings is going to be that good, especially, with no hopes of continuous funding coming to help that entire industry. So sad what's going on with that industry. Good companies being affected by that, but until a stimulus is passed, anything in that sector, I think, will continue to be a struggle. Now next, we're going to go to ticker sign INTC, which is Intel. Their moving average 10 is $54.50. Moving average 50 is $53.90. Moving average 100 is $53.60. So they ended the week at 54.14. But they are bullish, denoted by this moving average 10 line being above moving average 50 and 100. It looks like they've continued to go up as time has gone on. So starting around the 15th, they continued to go up, but did have a pretty large sell-off in the term of the end of the week. So going to some information on Intel, just basically going to look at some of the press releases from them. Intel SGX enables Magnet to create a trusted computing environment. Intel SGX helps UCSF propel medical devices innovation. Celebrates Manufacturing Day, IEEE Quantum Week. Intel highlights full stack quantum research, advancing the telehealth revolution through enabling technologies. So they have quite a bit of things going on for their company as a whole, continuing in the AI field as well as this telehealth field. Two big topics that have come about, at the beginning of 2020 and a little bit before 2020. But it seems like their focus is on AI and AI systems, and I think they're using AI to help with the telehealth as well. So going into the options side, we're going to look at Intel. We're going to go to their January 15th day for strike price. Their 52-week high is $69.29. Even though, they've kind of fell off towards the end of the day or continued to fall off for quite a while, I think Intel is on a pretty good track. Me personally, I think one of the biggest moves that's happened for Intel is the fact that they had switched from Apple has switched from using Intel, so now Intel is no longer going to be inside of the iPhones, but that gives Intel more room to just do what it wants to do and focus on AI and AI technology. So I don't think that hurt. I think that actually helped the company as a whole, and interested to see some more products coming from them. But I think the call is a pretty good option with $69 being their highest point. I think a strike price between $60 to $70 is a really good price, especially for calls. Now I'll be watching this as the strike price, especially the 71 because that's really close or right above their 52-week high. But you're looking to pay between $128 per contract to $26 per contract. So not that expensive as far as contracts are concerned, but definitely look for movement coming up to their earnings, which is going to be on Thursday. So lastly, I want to go into my last one. I actually don't have it on here, so I'm going to type it in. So it's going to be American Express. So let me go to their investors relations tab. It's not on here. Oh, yes it is. So AXP. I was looking for the ticker. So AXP. So let's go to add them to the watch list. All right, and now we have them on here. So their moving average 10 is $105.28. Moving average of 50 is $105.10, and the moving average 100 is $105.33. So they ended the week at $104.84. But it looks like they are still bearish. So they have not gotten past this moving average 100 line, and they're below this moving average 50 line. So, right in between both of those metrics. But, we'll see after earnings. Their earnings is going to be on Friday. So let's look for that. Going into some background information on them. This is just some of their press releases. They declared their regular quarterly dividend. So they are a dividend company. If you want to learn more about dividends, I'll link my course. It's free as well in the top up here where you can learn more about dividends and get started on your path to passive income. But according to their last quarters, it says their revenue was $7.7 billion. Earnings per share of 0.29, and that's pretty good. But going into the option side, what is my opinion on them? So I think that they're going to continue to do well. I think a lot of people are still using American Express. I put them in the same category as Discover. Both sectors kind of struggled a little bit. Probably American Express not as much as Discover, but both sectors were hit due to the pandemic. but I do think American Express is a bigger chain than Discover. So I think with their 52-week high being $138.13, I think it's a pretty good assumption that they're going to be doing well and beating their earnings. So this one is Friday, so it may be a little more tricky than the rest of them, especially considering, Friday being the day of their earnings. Now, I think it will be before the market opens, so you'll have time to execute it throughout the week. But looking at with the January 15th expiration date, I think a strike price between $110 to $120 is an okay option. I wouldn't go, close to the 140 line, even though it's a little bit cheaper. I would say, try to keep it in between 110 to 120 because it can go up, but, those numbers are, harder to achieve in my personal opinion. But if you're low on cash and you want to try to get in pretty cheaply, you can always go 145, especially considering that's only $5 above the actual 52-week high. So you're only paying $6 for that one. But sticking with the 110 to 120, you're looking to pay between $480 and $191 per contract. Now, bear in mind that everybody's financial situation is different. So, some things are more expensive for other people opposed to other things being cheaper for other people. And, some people don't have a budget at all. They just, buy it. The main thing is risk management. Know your budget. Know how much you're willing to spend. Know where you're trying to execute. If you can only afford the $6 one, then just look at the $6 option and see how that performs. If you're new to options, this shouldn't be your only video. Go look at some other videos. Try to learn more about options because options can really, help you to grow your account, double it, quadruple it in a matter of couple of weeks. But it can also do the same effect. You can lose all of your money in the matter of days. So it's a very volatile, high volume, high trading atmosphere. Earnings is definitely one of the biggest catalysts for the market moving and options trading. So volatility is key when doing options. But I hope this video helped you all. Drop a comment down below to which stocks you guys are looking at. I'll try to post this list on the community tab. So hopefully, if you're not able to catch the video, you can just go to that one and get a quick recap. But good luck to everybody out there trading out there this week. And I'll see you guys next time. Peace.
Thank you.